Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Tether closes the books on its first Big Four audit, while the SEC postpones critical rulemaking. Two stories reshaping the regulatory landscape today. Tether announced on August 13th that KPMG US issued an unqualified audit opinion on its 2025 financial statements, the best possible result. This marks the first complete financial audit from a Big Four firm in Tether's history, confirming reserves exceeded liabilities by $6.814 billion as of December 31, 2025. The audit examined transactions, counterparties, internal systems, and physically inspected Tether's gold bar holdings. CEO Paulo Arduino called it the largest inaugural financial audit in history, with $182 billion in USDT circulation. The timing is notable. This audit arrives as the Genius Act imposes stricter stablecoin requirements, including prescribed reserve assets and weekly regulatory reports. Gold, representing a significant portion of Tether's reserves, does not appear on the proposed FDIC reserve asset menu. Tether launched a separate USAT product through Anchorage Digital Bank for Genius compliance, but questions remain whether the company will shift reserves or face US access restrictions. The SEC abruptly cancelled its Friday meeting where commissioners were set to vote on proposing regulation crypto, citing an unforeseen scheduling issue. No replacement date has been set. This would have marked the SEC's first crypto-specific rulemaking rather than applying existing securities law. The delay also affects the innovation exemption for tokenized securities. Sources indicate White House concerns that proceeding could interfere with ongoing Clarity Act negotiations in Congress. This leaves both legislative and regulatory paths to crypto clarity stalled. The Clarity Act faces uncertain prospects when the Senate returns in September, with prediction markets assigning just 20% odds of passage in 2026. Bitcoin trades at $62,754 this morning, down 1.43%. Spot Bitcoin ETFs recorded $333 million in net outflows this week, reversing the prior week's $853 million inflows. Rising capital costs add pressure, with 30-year Treasury yields hitting 5.22%, the highest level since 2001. Ethereum sits at $1,874, while XRP teeters just above $1. Trezor disclosed a data breach at shipping partner ShipMonk affecting 13,689 customers. The breach exposed full names, emails, phone numbers, and shipping addresses for customers who ordered between May 10th and August 8th. Index provider MSCI opened a consultation on rules that could exclude non-operating companies from its global investable market indexes, targeting Bitcoin treasury firms Strategy and Metaplanet. Strategy holds 840,000 BTC worth $53 billion, and Metaplanet holds 43,000 BTC. Feedback closes September 30th with potential implementation in November. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.